The situation of the European banks has strengthened a lot in the last years. The capital position of the banks is much stronger. The asset quality has improved a lot. Is now at non-performing loans are at the lowest level experienced after the great financial crisis, and also the profitability of the banks has improved. So all the quantitative metrics are in a very good place. Still, we have identified in our supervisory process weaknesses in the bank's governance, in the bank's internal controls, risk management, which are a source of concern in a moment in which the macroeconomic outlook is deteriorating, interest rates have increased very fast, and uncertainty also in the geopolitical environment is still high.
Let's talk about the NPLs, because I think that's really astonishing that they are so low, given that we're talking about a potential hard landing of the economy, a recessionary scenario. So shouldn't they increase the provisions?
You know, I've been crying wolf for a long time on asset quality, and I'm pleased to see actually that it has remained quite resilient so far. So the situation has remained pretty positive. We see a little deterioration now starting. It has started first in the consumer finance area, now also commercial real estate. We see the non-performing loans start increasing slightly. So it's clear that there will be some deterioration. There is always a time lag between the moment in which interest rates increase and the moment in which borrowers are unable to pay back their loans. So we need banks to remain vigilant and especially to take proactive steps to contact their customers and propose solutions once the situation starts deteriorating.
Especially the commercial real estate market, but the real estate market as such might actually pose a big problem to banks. We have seen single risk events like the unfolding of the banker empire, but also others. Do you think these are one-off events, or could it spread into a wider thing?
In the commercial real estate market, we have seen now prices declining around 10%. If you look at the real estate investment trust, we see that they now trade 35–40% below the levels of pre-pandemic levels. So it's clear that the sector is suffering. An issue we are particularly focusing on now is refinancing risk, because many of these loans are bullet or balloon loans, which have large repayments at the maturity, and we have a number of loans coming to maturity in 2024 and early 2025. So there will be the moment in which the borrowers will experience the higher interest rate environment. So we are doing a lot of supervisory work in this area.
Is it across the whole euro area, or are there countries which are especially exposed?
Well, it is not specific. Of course, there are some differences. Commercial real estate, however, is more or less a broader type of development. Also, some European banks are exposed to the US commercial real estate market, which is also experiencing significant decline in prices and deterioration in quality. So, you need to look at the banks and their specific portfolio. Many of these banks specializing on commercial real estate lending have very international portfolios.
How do you treat the point of governance if you say that there are weaknesses in governance? I mean, how can you, from outside, actually improve the governance of an institution?
You're right. This is a delicate issue. Of course, we don't want to, take the steering wheel off the hands of the management. But we try to identify weaknesses, to highlight them to the attention of the boards of the banks, and to ask for remediation. Some of these weaknesses are, for instance, in the effectiveness of the board or the internal functioning of the board. And sometimes we suggest to strengthen the expertise in the board, or maybe to strengthen the number and role of independent directors. Or sometimes it is an issue of improving the status of the risk management functions within the internal governance of the banks. So we provide suggestions, recommendations to the banks to strengthen their governance, to increase the challenge also that the board can address to the executives. and to have good check and balances inside the functioning of the bank.
Earlier this year, I think it was in March, we had the funding crisis of regional lenders in the United States. What are the lessons learned from that, also for European banks?
European banks were not particularly affected by that shock. And there are some reasons, some elements of strength. The first one is that, for instance, they are not particularly exposed to unrealized losses in securities portfolios which are held at amortized cost, much lower than US banks, for instance. The other strength is that our banks have a much more diversified deposit base. So retail, operational deposits, uninsured, institutional, so it's much more diversified, so much less prone to run. Still, let's say we shouldn't be complacent. It's clear that the adjustment in interest rates can generate major risks. When there are moments of turmoil, investors look at the banks on a mark-to-market basis. So what is their real economic value of equity? And banks also need to be very, very attentive on the sustainability of their business model. We saw in the case of Credit Suisse, for instance, investors lost faith in the sustainability of the business model of the bank, and there was a massive outflow of deposits. So these areas need to be particularly looked at.
So in other words, liquidity is much more a concern now than it was before?
Well, of course, funding and liquidity conditions are becoming tighter, and banks have so far managed the transition pretty nicely. So they've been able, for instance, to reimburse the targeted long-term operations, the TLTROs of the ECB, without suffering major decline in their liquidity indicators. So they're still strong, and they've been able to tap the markets well. But the liquidity and funding conditions are changing fast, so they need to be very careful in their asset and liability management.
One last question on the outlook for next year. The macroeconomic development might actually deteriorate for the euro area. What will be the effects for the banking industry?
Well, in our priorities that we also published today, of course, we give great focus on great attention to credit risk, especially in the areas which are most sensitive to interest rates, so residential and commercial real estate, as we mentioned, but also leveraged finance or counterparty credit risk, which is where the banks interface with non-bank financial institutions, which are maybe taking highly leveraged and concentrated positions right now. So that's an important area. Then, as I mentioned, the liquidity, funding, and interest rate risk in the banking book remain very high, and we will focus a lot on asset and liability management. So these, I would say, are the main areas in which we will be focusing our supervisory attention.